All right, good morning, everybody. Let me share my screen here really fast. All right, I'm going to give everybody a couple minutes to show up before I get started. Hopefully, everybody's having a good weekend. Oh, Cyber's here. You haven't seen this enough times, Cyber. Sequence. You should try my wife's food. Chinese spice is on a different level. I guess like Thai spice, but like that Szechuan Chinese spice, that stuff really like cooks you from the inside. Like I can do Mexican spicy or I don't know, like Indian spicy and Thai spicy. My wife cooks some stuff and I'm like, whoa. Like, yeah, I can handle spice, but that's on a whole nother level. All right. That should be enough time to let everybody get a chance to get in here. Um, Anybody want to pick a ticker symbol? Hopefully something I don't have a bunch of drawings on. While I'm waiting for a ticker symbol, I'll do the boring stuff.
I think PCX should be okay.
Um, so I am live streaming this on YouTube, so I'll just throw out there, this is not financial advice. I have no desire to become like a professional YouTuber, so this is not like a high quality, high production thing. It's going to be pretty rough and raw, um, but the information should be good. The class will probably be a good hour to 2 hour long class. I would guess right around probably about an hour and a half. So if that's not for you, this video is not for you. But if you can handle the hour and a half long video, then by the end of this video, you should have a pretty good understanding of how to be profitable trading stocks. So, sequence from my Discord, as for DKNG, we're going to go with that. Earnings on Friday. I'm doing that one because I know I have no drawings on DKNG. But there's some pretty exciting earnings coming up this week. Um, anyway, so we'll start with how I chart. Um, Everybody um, in the Discord should already know this, but people on YouTube, how to get access to this volume profile is in the description. Um, and once you have the volume profile, you want to change the row size to 200 and the value area to 68. Some people in the Discord might not know that. You can also extend your POCs to the right. I don't do that. I just draw them in. Um, and so um, I pick the ones that are important of the ones that are of importance. Um, so let's just draw some of these in really fast. Um, and then I'll explain what POCs are, how they work, and why they're important. And this might be actually like extra rough this morning. I'm not awake yet. I don't know why. I slept really good last night, but I still feel a little foggy. I'm still getting through my morning coffee. All right. So I'll explain everything here in a second as far as what I'm looking at um, once I get these drawings done. Okay, so first we'll start with what a POC is, what a virgin POC is, um, and then how I use them for charting. So actually, I'm not going to start with this day. Actually, let me remove this for right now. So right here, February 8th, you can see down here at the bottom of my screen, February 8th, we have what is a virgin POC. Your POCs, you're going to want to chart on the 30-minute, 30-day time frame. And with that said, one of the questions I get a lot, and so I'll cover it really quickly. When you move to a different time frame, your POCs will move as far as where they're plotted on your chart. But the ones that you draw in on the 30-minute time frame are going to be the ones that are important, that are going to be respected by price movement. So on February 8th here, we have what is considered a virgin POC or a virgin point of control. Point of control is going to be the area on the chart where you have the most trading that takes place on any given day, whether, that's buying and selling, not just buying. So here on February 8th at roughly $21.86 on DKNG is going to be the largest trading volume of the day. And so we put our POC there. This POC will remain a virgin POC until it's touched on another day. So like during February 8th, it can be touched as many times as the stock wants to touch it, and it still remains a virgin POC until it gets touched on a subsequent day. So right now, once the stock price leaves this POC or this virgin POC on February 8th, it never comes back down and touches it. So this one remains a virgin POC. So I always will type the date and that it's a virgin POC versus just a POC. So I know when I'm trading that I'm looking at a virgin POC. Virgin points of control have they're respected more. Basically, they act as a magnet for price action. They also are going to act as stronger support and resistance. So they're more important than a regular POC. So like here on February 7th, if I was to chart this one, this is going to be a regular POC because the stock price left it. And then on the very next day, the first 30-minute candle of the next day touched it, touched it here. And it would become a regular POC at this point here. So during the trading day that the POC is formed, like I said, it can be touched as many times. It doesn't matter. After hours and pre-market, it can continue to be touched. If the price never leaves the POC and keeps touching it the next day, it still remains a virgin POC. it's once the price leaves it and comes back to it and touches it that then it will no longer be a virgin POC. So I don't think I covered this, but POCs basically act as support and resistance. And sorry, I can't draw and talk at the same time. Just not going to happen. Or I should say I can't maintain a thought of process while I'm plotting on a chart. So, sorry, I have a question here in Discord. Let's see. Do you consider a POC a virgin point of control still if it was touched on pre-market, post-market spike? If you're talking about like if it's so if we're talking about like this POC here, February 8th, if you're talking about after hours and pre-market right after the POC is formed and it gets touched, yeah, it still remains a virgin POC. If it got touched, pre-market or after hours on a subsequent day on a spike, yes, it would no longer be a virgin point of control. So any touch on a subsequent day after the stock price has left and comes back to it, it would lose that virgin status. So why points of control are important is
quick question.
Yes.
So on the same day, if it pre-market or post-market, if it came back and touched it, it's still a virgin. But on the subsequent day, if in the pre-market or post-market it touched it, it's no longer a virgin POC?
Correct.
Okay, thanks.
No problem. All right. So the reason that POCs and virgin POCs are so important is you want to think about the psychology of buyers and sellers. So when I present this, think about yourself as a trader. If you happen to buy DKNG up here, where the largest amount of trading was taking place on this day at $28.48, and then the very next day it dips down to $27. What are you going to do the next time we get up to $28.50? You as a retail investor, what do you do here? If you purchased here and stock price comes down and you're now in the hole and it comes back up and touches it right here, what do you do? Hopefully everybody's thinking that they're going to sell, break even, because realistically that's what most people will do. And so you can see here on this next day, we left here, came back up, saw some selling here, dipped down, came back up, and then this POC is respected. There's sellers here. And there's sellers here because a lot of retail investors, when they go negative, they look to just get break even. And as a good retail investor, you don't want to do that. You should have set goals for yourself. A 2-to-1 risk reward. So you should be shooting for like negative 10 to 20%. And if you're taking negative 10% as your stop loss, then you should be shooting for positive 20%. If you're taking negative 20% as your stop loss, you should be shooting for positive 40% on every trade. So don't be the person that just looks to get out break even. This doesn't apply to option trading. This is going to be people, that are buying stocks that are going to get out here. If you're an option trader, theta, you're not going to be break even here. So this is retail, excuse me. This is retail investors selling up here. It could also be institutions, But most of the time, you're going to see people that bought at this level went negative, and they're looking to get out here. And then on the inverse, if we look at institutions and market makers, they'll place an order down here, or even down here, $17.50. And what they'll do is they'll normally put like a large order on the dark pool. And let's say they wanted to buy, I don't know, $1 million of DKNG at 1750. They put that order in as a limit order on the dark pool. They get a partial fill. People see those dark pool orders going in. They start buying as well. Stock rips up. Market makers, they don't chase price action. So they'll leave that limit order there at 1750 until the next time the stock comes back down to that price. So right here, we'll just throw this up here, January 24th, Virgin POC. And the next time price comes back down to here, you should see a bounce, because that limit order that was placed by market makers is still going to be there. And you'll also have retail investors step in at this price that'll start buying there as well. So, you can see, if you look at the chart, where these get respected over and over again. Here, this Virgin point of control, January 13th gets respected here, February 11th, rejects off of it. So again, you have buyers here that went negative, stay negative, finally come back up, almost touch it. They start selling to get out, break even, makes the stock dip back down. So that's how you want to think of POCs and Virgin point of controls. And so, like I also mentioned, Virgin point of controls and POCs also act as magnets for price action. More so when you have a lot of Virgin point of controls in one direction, the stock will generally get pulled that way. So like if we draw these out really quick, okay. So if we look down below, we have a VPOC here, and we have a VPOC here. This is a POC. So to the downside, oh, I guess, and we have one here as well. This is a VPOC as well for February 8th. To the downside, we have one Virgin POC, and then we have a POC, and then we have two more Virgin POCs below. To the upside, we have 3 Virgin POCs in a row. So more likely for DKNG to be pulled to the upside versus the downside. News obviously is going to weigh stronger on what price does. Like with the upcoming news about war, tends to create uncertainty in the market and will cause selling off. But then when the war actually happens, we generally will see strength in the stock market. So with all of the uncertainty we have right now in the upcoming week or two, I wouldn't be surprised to see downside. I wouldn't be surprised to see this pulled down to this February 8th VPOC or even lower. I don't know why I didn't chart this one. So hopefully everybody right now has a very good understanding of what a Virgin POC is, what a POC is, and how they work as far as price action. What was my decision making? Sorry, I have a question right now in Discord. What was my decision making on what POCs to draw / chart? So I was about to get into this anyway, but you can see here I put a red box in this area. I have 1, 2, 3, 4, 5, 6, 7 POCs here and 1 virgin POC in this area. And so what I'll do is I draw a box around those and I'll put 8x POCs. So I know in this area here, I have 8 POCs. I literally will not trade in this area. I'll take a trade from here down to this area. But I know once the stock price gets in here, I'm going to see a lot of choppiness. And if I were to draw it out, I'll see something like, price come down into here. And then once we get there, it's just going to go sideways. Something like this until we finally break below. I will absolutely take a trade at the break of this, what will end up being a consolidation area, down to the next POC. So, and actually I was wrong. I said there's 1 POC below. I have 2 POCs below this area. So this is a POC. I'm not going to put the dates. I'm not trying to make this video about putting dates and stuff on POCs. But like I said, I do put my dates on everything. So when I'm actually trading, I can see what I'm looking at, how old they are, and so on, whether it's a POC or virgin POC. So the break of this consolidation area, I will absolutely take a trade and take it down to the next POC. I would expect a bounce here. If it then goes to the downside, what I would expect to see, and this is speculation, I never know what's going to happen, but this will probably end up creating like a bear flag if we came down to here. And then I would absolutely take the break of that bear flag down to the next POC or virgin POC. Sorry, I want to take some of this off of the chart here. So that's POCs and virgin points of control in a nutshell. To me, they're instrumental in trading. They get respected constantly. I can show you charts where POCs and virgin POCs get respected like 8, 10 times in a row. So you really want to have them on your chart as a good place to exit trades and also take trades. I feel like I've skipped something on POCs, and I'm trying to think of what it is. Anyway, it's not popping in my head right now, but hopefully it does, and I'll cover it then. But so yeah, that's POCs, virgin POCs in a nutshell. The next thing we'll go over is going to be our volume profile. So let me highlight. Sorry, I want to make it big so you guys can see. All right. So this here is your volume profile. You can see part of it is highlighted. Let me just draw this to make it easier to see. I'm like, what color is going to stand out? Why is this not working? There we go. So this highlighted area is called the value area, and I'll cover that in a second. But this whole thing here, the grayed out part as well, is going to be your volume profile. And again, this is showing trading throughout the day, buying and selling. And then within the volume profile, we're going to have volume shelves. This is not the best one to look at. So actually, it's probably because I'm on the 30-minute. But really quickly, while we're looking at this volume profile, and then we'll go down to a lower time frame, and I can show you the volume shelves and how it works. But this one here is shaped like a P. Anytime you have a P-shaped volume profile, you're going to see upside. And let's find another one. So this one here looks like a lowercase b. Actually, this is like a double distribution day. Let's find a B. Here's a B. So where you see like a lowercase b, we're going to see downside. These volume shelves form as the day is playing out, so you're not going to know first thing in the morning like, oh, it's a B, let me take puts, or it's a P, so let me take calls. They form as the day is going, but I'll show you guys right now how to use volume profile to your benefit during the trading day. Jeez. So I'm going to try to find a day where it's not like a super trending day or a super sideways day. Let me find something better. We'll use this day. So up here at the top, this is like a skinny belly on volume profile. Actually, let me turn off pre-market. Now I have no idea where that day was I was looking at. Here we go. Let me get zoomed in here again. And actually, let's do this naked. Oh. So let me just draw a few lines really quick. And then we can turn our candlesticks back on. Okay, so just from looking at volume profile, I mean, I did get a peek at the chart, but I didn't try to memorize it. I can tell you pretty much how this day played out. You know, I know we started up here. We came down to this area, and due to the volume shelf that's formed here, so these these little bumps on volume profile are called volume shelves. I like to think of them as stairs. So anywhere that you have a stair, or if you think of like walking up steps, or walking up a ladder, as long as you have a step or a rung to stand on, you can stay in that area. And then you can take a step up to the next step, or you could take a step down. You could take a step up to here, and you can hang out there because you have a step or a rung that you can stand on. And then you could go from here to here, because here again you have a step or a rung that you can stand on. They're called volume shelves. And again, I like to think of them as steps. You can take a step from one to the next to the next. Where you don't have a step, so like if I was here and I come down and break past this step here, I'll quickly fall from here down to the next step, where I'll finally find support again. So this area of the chart here is considered a narrow belly, or this area of the volume profile is considered a narrow belly. Where you have a narrow belly, you're going to see price move quickly from one volume shelf to the other. Once we're here and we cross back above, we can move quickly from this volume shelf up to this one here. So with that said, I can tell you on this day, I know we opened up here, we came down, we're going to consolidate a little bit in here before we fall down to this next volume shelf and consolidate here. After that, I don't really know. I mean, obviously we can go from, this is a very small area on the chart, but I didn't want to just make this one big volume shelf. I'm sure we go from here to here and start consolidating in this area. We might come back up to here and consolidate more. And a possibility that we go from here to here and consolidate more. But based on the size of this volume shelf, I don't think price returned back to here. I'm pretty sure at the end of the day, we just consolidated in this range down here. And we do have a tiny volume shelf down here as well. So at one point in time, price came down to here and probably consolidated a little bit as well, and then came back up into here. But this is going to be, and again, our POC is here. So this is our point of control. Most of the trading volume took place right on this line. So most of the price action is going to be in this range on this volume shelf. Hey, Dina, happy to see you. So hopefully that's really clear to everybody. Obviously, the volume shelf forms as the trading day takes place, but as it's happening, like you'll have your value area or point of control up here until we move lower, and then the value area and point of control will move as the day goes on. And so if our value area was here, when we break below that value area, you can easily take puts. Or if we were to break above, you could easily take calls. So now I'll turn the candlesticks back on. And so exactly what I said. So we opened up here, came down, we consolidate. We did consolidate for a minute. We're looking at 3-minute charts. So 9 minutes, not very much consolidation. We came down and tapped this volume shelf here, and then came back into this area and consolidated, broke down, consolidated, came down here. And like I said, we traded in this area for a little bit, but most of our trading took place here. We came back up into this volume shelf here, back down here. So yeah, once you learn to look at volume shelf, it's pretty easy to take trades when you leave volume shelves down to the next one. Obviously, like I said, this volume shelf would not exist. If we were to go back in time, hopefully when I do this, it doesn't like switch to a whole new chart. Okay, there we go. So we can see here we have a volume shelf. Let me turn off the candlesticks so it's a little bit easier to see. So we have a volume shelf here. And I would even move this a little bit tighter. Once you've established this, that you're consolidating here, you can either draw lines or you could draw a rectangle This is what I do. I'll draw rectangles. Sorry, I'm trying to get this accurate. I'll draw rectangles, and when I leave this volume shelf upside or downside, I'll take puts or calls. And so if we turn the candles back on here, you know, this would have been a great trade. You have to be quick, but you can easily get 20, 40% here on this trade. So if you took puts, you know, on the retest of this volume shelf and then the break, if you didn't get out on this wick, you know, this is, well, it's not quite a hammer. I don't know exactly what to call this. It's a doji of some type. This should be your warning of a reversal right here to get out of the trade. Same thing, we come back into this volume shelf. These wicks, you're not going to be trying to grab trades on wicks like this. But when you see this wick break below and then we come back and retest, this is a great entry right here on this candle. You might get faked out because it does wick back up. But most traders won't get faked out here on these wicks. You should not be using like hard stop losses. I'm not going to cover that right now, but you should have mental stop losses. So these wicks wouldn't take you out. They move pretty quick. And then you'll get a nice play to the downside. If we move forward, good job. I don't know what just happened. Let me find my drawings. Oh, perfect. Let me undo this. Okay, here we are. Sorry, slight technical issues here. Zoom back in. So anyway, we were talking about this here, taking this trade on the retest here, taking puts. Again, you shouldn't get stopped out on these wicks, and then you have a great play to the downside. I mean, this is a huge move. So that's volume profile for you. Hopefully that makes sense to everybody. Next, I'll just cover value area. I want to find one that's like actually decent for explaining to you guys. Actually, let me remove all of these lines so that it doesn't confuse. Oh, the chart. This is going to be a hard one to remove. Well, for now, that white line can stay. After I'm done with this class, I'm going to reset the whole chart, so I'll take it off then. All right, we'll use this day. So our value area, again, is going to be the highlighted area on the volume profile. I would really wish it was clearer and easier to see on TradingView. I'm sorry, on, yeah, TradingView. Wow. Like I said, I'm really not awake today. Um, this is one of my favorite trades. And huge props to Shorty for teaching me this. I'm sure a lot of people already know where I'm going right now. But so this area here that's highlighted on the volume profile is called the value area. And that's where, well, depending on who you talk to. So like I said, value area, volume, you want it to be 68. Some people use 70, so 70% or 68%. 68% is the standard 2-point deviation. So I use 68%. Most people that I know use 68%. There are people that use 70%. It doesn't matter which one you use, but I recommend 68%. So this highlighted area on the volume profile is going to be where 68% of the trading took place on this given day. And there's a great trade for volume profile called the 80% rule, which is once this value area is established and the stock ranges in that area and then leaves it and comes back into it, there's an 80% chance that it'll go from one side of the value area to the other side of the value area. So 80% is pretty good odds. So anytime you're trading and you're watching, this is a great trade to take if you see it playing out. So as soon as you see price action come back into the value area, in this instance, you would take calls, and you can play it all the way up to the top of the value area. Most people will probably end up getting out of the trade where the POC is, because you're going to see some consolidation there before it continues to the upside. But again, this is a good, this is a good enough move from breaking back into the value area to the POC to make some decent money. So Caturday, sorry, Catur, I don't know how to pronounce your name. I have a question in Discord. How long does it usually take for the value area to be established? I know as the day is going on, the value area may be moving a lot. Yeah, so the value area will move a lot. If I were to play this day back, and you guys can do this yourself, as far as, like you can back test, use the replay feature in TradingView or on TOS, or whatever trading platform you use, as long as they have it. Just looking at this day, I can draw a line here and I can guarantee you at one point the value area was here. And so if I use the replay feature and click to here, I guarantee you the value area is here. And that's fine. If the stock left the value area and came back into it here, you would play the 80% rule. But that didn't happen. So we came down here and we ranged a bit. At that point, this value area probably moved down, probably not as low as it is right now, but it probably moved to somewhere right around here, I would guess. And here you would play the 80% rule. But once we had, actually, it probably didn't move quite that far down. But yeah, so the trading that happened down here was enough to bring the value area down to here. And so at this point, when it crossed over, that's when you would have took the trade. But so it doesn't matter. Yes, the value area and the POC will move as the day is happening. That doesn't matter. The 80% rule will play out as long as, as long as you're following it, where the value area has been established. Once you leave it and come back into it, whether it's to the upside or downside, it doesn't matter. If you leave it to the upside and come back into it, you would take puts. If it leaves it to the downside and comes back into it, you would take calls. It doesn't matter that it's still forming. you're just going to use what the information that you have available at the time. It's still, it still will work 80% of the time. And so Joyce from Discord's asking if I can repeat the 80% rule again, and I will. So once your value area is established and the stock's moving, within this value area, once we leave it, like here, this is a fake out. That's fine. Whatever. Of course, no technical analysis is 100%. And so we're going to get faked out. But so anyway, once we leave the value area and cross back into it, there's an 80% chance we'll go from one side of the value area to the other. And you can see this plays out perfectly here. Like it literally touched the far side of the value area. Shorty likes to wait for a retest, which we do get here. We actually get several of them before he'll take the trade. Some people will just take a trade as soon as you cross back into the value area. In this instance, they would take calls. Shorty, I don't know what candle he would choose to get into this trade if he did take it, but he waits for a retest and he would take calls here to the upside. And again, this area here where we have the POC, you're going to see some consolidation, and that's fine. You can happily take the trade from here to the POC and make decent money. But if you're patient, there's a good chance it'll go to the far side of the value area. Okay. So hopefully that's clear to everybody. Okay. Well, trading mindset, this is recorded. It'll be posted. You can either watch the replay in my Discord or the edited video will be posted on Shorty's Discord. So Asuri is asking, do you trade using other systems too? Asuri, I don't know what you mean by systems. Are you saying, like, do I use different technical analysis? Because yes, I do. I'm going to go over exactly how I trade now. So let me take some of this stuff off of my chart here. So the stuff I'm going over, obviously, the average person is not going to be able to to take all of this information in one session and like become a professional trader. But the information that I'm giving is enough to make you profitable. If you, I don't know, you might have to watch this video a few times, but it's not enough to to become like a professional day trader. You're going to want to do a lot of studying to get there. But this video alone is enough to give you a really good head start. So how I trade, how I look at charts is I have roughly 20 charts that every single day I'll draw my POCs, volume profiles. When you first start out, sorry, I'm just reading in the Discord right now. Kadudi, I don't know how to pronounce your name, is asking if it's possible for me to do a replay on a day to show how I'd play the 80% rule, trade, entry, exit. I mean, we can do that. I'm not going to do it right now while I'm live on YouTube. It'll take too long. But if people in the Discord want to do it, I'll happily do it. But just doing, a replay will take like an hour. So, yeah, it's too long, too much dead time. But yeah, if people want to do that, we absolutely can do that. So how I trade, like I said, I have roughly 20 charts that every single day I'll draw my POCs, volume profiles, or sorry, draw my POCs and virgin POCs, and I always put the dates and whether it's a virgin POC or not. And then on those 20 charts, I'll go back and you know, if one of my virgin POCs gets touched, I'll change it to a POC. And then I'll draw in my new days. When you first start out doing this, it takes a lot, you know, to draw POCs on 20 charts that have none at all will take a long time. But once you do it and you maintain it, it's pretty quick to just throw your new virgin POCs up and to change existing ones from POC or from virgin POCs to POCs. And I just remembered what I couldn't think of earlier. POCs are good for about 30 days. After that, they'll become pretty ineffective. They won't be respected by price action very much. Whereas virgin POCs will be respected indefinitely. Like it doesn't the length of time doesn't really matter. Virgin POCs are going to be much stronger than POCs. So, sorry, if you hear this, I'd love to know what you're asking as far as if I trade using other systems. If you can refine that question, I want to answer you, but I don't really understand what you're asking me. So, if you could type that question in a different way, I'll answer you. Sorry, I had to cough there. Okay, so how I trade, again, I'll look at charts the night before. Like if I was looking to trade DKNG, I would plot out all my POCs and virgin POCs on the 30-minute time frame. Once I do that, I actually just turn off my, turn off my value area or volume profile. I want extended hours on. And then you'll hear a lot of traders say this, and I can't signify the importance of this, but always zoom out. You want to get a good overall picture of what's happening with the stock. So right now, you know, I'm on a month time frame, so each candlestick represents 1 month of time. You know, we're in a downtrend on the month here. From here, you know, on the month, I'll look to see if I see any like significant like support and resistance areas. Like here, this is a pretty good support and resistance. I might draw that in if I feel so inclined. If I was worried about trading DKNG, it looks like 1940 is a pretty important area where if we do see more downside, I would expect to see a bounce around 1940. So I would throw a line there. And then I'll switch to the 1 week chart. See if I see anything important here. I see a bear flag, a pretty huge bear flag. So I would expect to see more downside. You know, and again, if I'm looking to trade DKNG, I am going to plot this out on my chart. When I draw flags, or actually this is like a bear pennant, doesn't really matter to me. It's the same thing essentially. I'm going to see downside. So break of this flag, I would play puts. And you're probably going to see a pretty significant move. You'll probably come down to that, whatever it was, like, I forget. Was it 1940? You're at least coming down to 1940 on DKNG from this flag. It's a measured move. I don't think this is, well, yeah, I don't think that's going to happen. But normally your first trim would be the 272 level at like whatever, $4.50. I don't see DKNG coming down to $4.50 though. So I might be drawing this flag like way too big. I don't know. Maybe it's something more like that. Let's see what our measured move looks like on this. Yeah, 1740. I think this is more realistic. Anyway, I think something important to point out here is we're looking at a 1 week chart, and things on the 1 week chart take a lot longer to play out. So the shorter the time frame, excuse me, like a 3-minute chart will happen a lot quicker, and the move will be a lot smaller. Whereas things you find on like a 1 month or 1 week or 1 day chart, those will take longer to play out, but when they do, you're going to see a bigger, more significant move. So from the 1 week, I would now go to the 1 day and look and see if I see anything significant here. So before I say this, it hasn't happened yet, but we're starting to form like an uptrend. Here, if I'm trying to trade DKNG, I will happily play a break below here of this trend line I just drew. Again, as long as it doesn't fall into a major consolidation area. What's this? That's got to be the area where I have a bunch of POCs. Yeah. So if it breaks this trend line into this area where I have, oh yeah, the 8 POCs, I'm not going to take a trade right there because I'm probably going to consolidate more. But once it breaks this trend line and breaks through these 8 POCs, I'll take puts. From here, I'm going to go look at the 4-hour chart, see if there's anything significant. Nothing hopping out at me right now. I mean, we still have the same, beginning of an uptrend. Yeah, so here we have, actually really important for me to point this out. And again, ups to Shorty for teaching me this, but on any stock, you have one of 3 things happening. You either have a downtrend, an uptrend, or consolidation sideways. So here we see a lower low. This is going to be a higher high here. So if we look at our previous, this was a higher low here, and this wick is above that one. So this is a higher high. So lower low, higher high. Officially here we're in an uptrend. Lower high, higher high, lower high, higher high. Downtrend, is going to be higher low, lower high, higher low, lower high, blah, 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 so on and so forth. And then consolidation, is just going sideways. So this here is an uptrend. You can play breaks of this trend line. You could even, I don't personally do this, but there are people that will play bounces off of the trend line. So when it comes down and touches and bounces back up, they'll take calls. Me personally, I look for a break of the trend line to take puts, but you absolutely can play bounces off the trend line. So right now, DKNG on the 4-hour chart is in an uptrend. From here, I go to the 2-hour chart. Again, nothing significant. We still have this uptrend happening. Then I'll look at the 1-hour chart. And this might seem silly because, again, we're just seeing the same uptrend. But sometimes you will see, like a head and shoulders, inverse head and shoulders. Like this here is almost a head and shoulders. The reason it's not is the right shoulder needs to be higher than the left shoulder. and it's not quite there. Actually, they're equal. This actually could be a relatively sloppy head and shoulders if we were to draw it. So, there we go. So yeah, there we go. We have a head and shoulders here. Kind of, if I could get my points right, that would be great. There we go. But again, you really want this right shoulder to be higher than the left shoulder. And you can see it didn't play out because we're continuing with this uptrend. So like I said, this isn't a really good head and shoulders. You want that right shoulder to be higher than the left. And then for the inverse head and shoulders, you want the inverse. You want the right shoulder to be lower than the left shoulder. Okay. From here, I'll look at the 65-minute chart. Again, same thing. We're still in this uptrend. And then I'll generally go to the 30-minute chart. And if I haven't plotted my POCs and virgin POCs, I would do it here. Can I do that move again with the head and shoulders? I mean, I can. It wasn't a good head and shoulders. What was that? The 4-hour or the 2-hour, something like that. I mean, it's there on the 2-hour. It's not there on the 1-hour. Again, it's not a good head and shoulders, but you're going to take, the lower low to the higher high here, higher low, higher high, lower low, higher high, lower low, or sorry, higher low. And there's your head and shoulders. But again, it's not quite a head and shoulders because these are basically even. And again, you want the right shoulder to be a little bit higher than the left shoulder. And so from here, how this works is this line here is considered the neckline of the head and shoulders. And normally when this breaks to the downside, you're going to see a measured move. So let me draw this for you guys. So you go from the top of the head to the neckline. And you can see that's negative 1.63%. And so when you break the neckline here, or wherever you break it, you're expecting the same, like a 1.63% move. Wow, why is this? This is not right. What am I doing wrong? Oh, I was holding down control. So it was using my candlesticks. So anyway, you measure down to the neckline, negative 18.87%. And then you would measure the break of the neckline down, negative 18.87%. That's going to be good enough there because so head and shoulders are going to be measured moves. So again, from the head down to the neckline, you're going to measure, and then you'll measure a break of the neckline down for your measured move. And so if this were to play out, this head and shoulders, you would expect it to break the neckline here and come down to about $17.25. All right. So anyway, for me, once I've gone through all my all of my different time frames. I'll go to the 30-minute chart. And like I said, if I haven't drawn my POCs and version POCs, I'll turn on my value area or volume profile, sorry, and I'll go through and I'll plot out my virgin POCs and POCs. And then I'll be done with that chart and I'll go on to the next one. And so this is how I find trades, you know, for the next day. When the trading day opens Monday, I would be looking for a break of this trend line to take puts. And again, like I said, some people will look for calls on a bounce of the trend line. And there's nothing wrong with that. It's just not how I personally like to trade. So you can do either. During the trading day, I like to use the 3-minute time frame, 5-minute, 3-minute. And that's pretty much it. I don't really use the 1 minute. Some people do. So I'll just show you how I would trade DKNG if I was trading. It's kind of cheating with the candlesticks there. I can do the replay. It's just so time consuming. I'm not going to do it. At least, like I said, not on a YouTube live. But so the first trade I would probably take on DKNG if I was trying to trade it is this here. I have a flag, bull flag. When I draw flags, I don't bother drawing the pole and the bottom of the flag because I'm not looking for a break at the bottom of the flag. I'm looking for a break to the top side. This is kind of an ugly flag, but it is what it is. So if I was looking to take this trade, there's 2 entries you can use for bull flags and bear flags. The first one is going to be when you cross the trend line of the flag. You could take calls right here. The safer entry is going to be the last touch of the flag, which is going to be here. And you'll get less fake outs if you take the safer entry. The riskier entry, you'll end up, you know, you're going to be risking more, but you're going to get more reward. All right, so I have another question in Discord. Since you're using the 3-minute candle, do you take it on the break of the trend line in the middle of that 3-minute candle, or do you wait for the 3-minute candle to close? Or are you asking about this flag? Yeah. So for me personally, it really depends on how the day is playing. So like if we were to look at SPY or SPX Friday, I was taking trades the second it crosses over the trend line for bear flags. But we were having a trending day, and you're going to get faked out a lot less on a trending day. On a non-trending day, I'll probably wait for the safer entry, which is the last touch of this trend line before we crossed above it. So anyway, trending day, I'll take a break of the trend line on this flag, play it to the upside. This is a good move here. Like you should happily be out with profit, you know, before this candle closes. You can take the safer entry. You're making money as well. So for me, this would be the first trade I would take on DKNG on this day. This here, let me see. Where are my arrows? I'll just use this one. This candle right here. Why are you snapping to the candle? It's too big. Whatever. That candle here. It's a doji. This is a reversal candle. So I'll happily play calls from here. As long as the candle after is to the upside, I'll happily jump in calls here. And it's not a very good move. Let me see. We're looking at if you get in, yeah, it's like 30 cents, 40 cents on DKNG, which I guess is decent. You might get 20% out of this move. But I would take a trade here on this reversal candle. These are also reversal candles. Pretty ugly. There's a lot of buying pressure here with these wicks. So you would expect to see upside here. This one's probably like a hammer. This is a doji as well. You can safely take, or not safely, but both of these 3-minute candles here are telling you we're probably going to go to the upside. So this doji and this hammer or whatever it is, definitely going to the upside. You can take calls there. As for DKNG after that, we start consolidating. I'm not going to be taking any trades in here. So like I said, this whole consolidation area, I would also be looking over here at volume profile. Let me zoom in so I can get everything on the chart at the same time. So we have a little bit of a skinny belly here. Not very much. It kind of gets hard to trade DKNG after this point here. You might be able to take puts here on the break of this consolidation up here. But you're not getting the best moves. What is this, like 22 cents to... Yeah, it's like a 20-cent move. Not huge. Does turn out here. And again, we would get faked out here. But me personally, 9 o'clock, 10 o'clock in the afternoon, I'm probably done trading for the day anyway. But if you got lucky and you took puts on the break here, you're looking good. And then again, we have a consolidation area that forms here. And this would have been the play of the day. If you recognize you're consolidating here and you take a break of this consolidation area, you get a good move to the downside. Let's see. Here, we have a bear flag. If you guys need, I'll draw the pole out. And normally, bear flags are going to be measured moves. You use your fib levels. So for bear flags, you draw from the top of the flagpole to the bottom, top of the flagpole to the bottom of the flagpole. These are some of my favorite trades to take. Either breaks of consolidation areas like this, or bear flags and bull flags. They're just so easy to find, and they happen all the time, and they're so easy to trade. So on this bear flag, if you draw your fibs from the top to the bottom, you now know your exit points. You would take this trade at either, again, either the break here of the trend line, or you're going to take it at the last touch of that trend line. Either entry, you're going to make a good amount of money. Your first trim on a bear flag is going to be the 272 level, negative 0.272. So if you took multiple contracts, you're going to want to trim a good portion of them here at this negative 272 level. And then this 272 level becomes your stop loss. So we wick down. If you were holding more contracts below this 272 level, when you come back to the 272 level, you should cut them there. If we did happen to see more downside, your next trim is going to be the 618 level. You should be out of pretty much all of your position at that point. But if you do hold like one runner contract, you would exit at the negative 786 level down here. I'll show you guys really quickly the fib levels I use. So you can copy that if you want. Should be also like the same fib levels that Shorty uses. And so that's how you play bull flags and bear flags. So for anybody watching this video going forward, if you're newer to trading, what I recommend, go on Google, search for a chart pattern cheat sheet, find one that you like, download it, print it out, I don't know, stick it on your wall, leave it on your desk, leave it next to somewhere that you're trading so you can look at it. And what I would recommend is pick one or two of these patterns. Like if you were to choose this cheat sheet here, pick one or two of these patterns. I would start with like your flag patterns. So your bull flags, bear flags, bear pennants, bull pennants, memorize those four, and spend a day or two just looking for those constantly on charts. You don't have to play them. You don't have to play the break to the upside or to the downside if you're not feeling confident yet, but start looking for them until you do feel confident, and then you can start trading those. And once you have those memorized, then you can move on to your falling wedges, descending triangles, symmetrical triangles, whatever, double bottoms, so on and so forth. And just go through all of these patterns until you have all of them memorized. Unless you're like, unless you have a photographic memory, I wouldn't overdo it. Just try to, try to memorize one or two of them a day. And then once you've done that, I would go to candlesticks. So same thing, you can look for a candlestick pattern cheat sheet, and start memorizing all of your candlesticks. And same thing, focus on one or two a day until you have them all memorized. And then a lot of people watching this video, I don't know if you're like me, I always like to say this because I remember when I was a new trader, I would hear people talk about technical analysis and, even watch people chart technical analysis. And in my mind, I would say that's BS. Like, there's no way drawing a flag on a chart is actually going to work. Like, that's a bunch of crap. And in retrospect, I think it's it seemed too complicated to me or too hard. And so instead of just being like, oh, this is difficult and I need to learn it, I was like, no, I'm just going to write it off as BS, instead of trying to learn it, and I'll try to figure out a different way to trade. And, looking back, if I took the time to learn technical analysis earlier, I would have had a lot less pain in my trading career. Going forward, I would have been profitable a lot faster if I just took the time to stop and really draw on charts. And it might seem really overwhelming at first. I know when I first started drawing TA, I'm like, God, how am I supposed to draw this, as the trading is happening and still take the trade? And it just seems so overwhelming. And really, if you step back and take your time and just focus on one chart, I would recommend focusing on SPY. But it's completely up to you. But I would recommend focusing just on one chart, specifically SPY. As you're learning your technical analysis, start drawing those patterns on the chart. You don't have to take the trade. So it might seem overwhelming at first, but draw your bull flags and your bear flags. And I think you'll find that you still have time to take the trades after you draw your bull flags and bear flags. For me personally, like I said, I don't draw the pole. And I also don't draw my fibs, but that's personal preference. You can draw your fibs. Then you have your exit point. For me, I get out of trades when I'm positive 40%. Your fibs will give you a more solid exit point. So they are good to have on your chart. They're good to use. Again, just me personally, I don't use them, but I think you'll find you can draw one line, again, versus drawing the whole flag. Like this, because I don't need this line. I'm not going to be playing a break to the top side of a bearish pattern. And I don't need the pole, because I'm not trying to play a break of a pole. So for me personally, I don't draw the pole. I don't draw the top of the flag. The fibs are good to draw, but you can draw one line, in a few seconds and easily take a trade when this pattern breaks to the downside. Either the break of the trend line or the last touch of the trend line will be your safer entry. So what I really like to recommend to newer traders or to people that have been trading for a bit and they're not having success, really slow down and step back and learn your technical analysis, memorize a few patterns, and then spend, a few days or weeks, whatever it takes, just looking for those chart patterns on your charts and playing those chart patterns. It might seem boring. A lot of people like to jump into trades just constantly looking for the next trade so I can hop into it. And that's not a good way to trade. A good way to trade is to find your patterns, play the breaks of those patterns, take your 20 to 40% profit, and then step back and look for the next trade. If you do that, you should easily be able to find 3 trades on any given day, and 3 trades done correctly, you should be 3 for 3 on the day. Will give you 5% gains on your portfolio. If you have a smaller account, 5% might not seem like very much, but if you keep compounding 5% every day on $1,000, you'll be a millionaire in a year. So, look for those trades, step back, look for your technical analysis, take your time, take it slow. And again, when you first start using technical analysis, don't let it feel overwhelming. You don't have to force the trades. You don't have to take the trades. Draw your patterns, see that it plays out, and then it'll build confidence for the next time you see that pattern to take the trade. So that's what I would recommend as a trader. I've got a few questions in Discord. I'll go over those. Or actually, it might just be one. Last question on that too. Let's see. Last question on that too. Are you market buying on big candles like that on the breakout, or are you just waiting to get filled on a good price? I don't. I couldn't even think of the last time I've used a market order. If that helps you out. I'll cover this really quick. Let me pull up Active Trader. Let me pull up my TOS so I can show you guys how I go about getting in orders. Whoa, yeah, not good. That wasn't supposed to pop up on that screen. Anyway. Sorry, give me a second here, guys. All right, I'm back. So for me, I use ThinkOrSwim for trading. This is like my main screen. You guys can't see the rest of my screens, but I have 12 charts here. And then that's on another screen. And then on another screen, I have another 4 grid with ES, NQ, AD, and VIX. Actually, I'll cover this at the end of the video here. But so for taking trades, I use Active Trader. And how I do this is, I covered this yesterday, but you'll go to this little grid icon and click on Customize Grid. And down here on this grid, you turn on Sidebar. And here on the sidebar, you can see you have Chart and Active Trader AT. So I just turn off the chart part and I turn on Active Trader only. Then I uncheck the sidebar and then I turn off Customize Grid. To get your Active Trader, so you can see here, I have this yellow 2 here linked to this watch list. I have this yellow 2 here. So anything I click over here will pop up over here. And so if I'm looking to buy something, I go to, trade. If I'm looking to buy February 14th SPX calls, for instance, I would come over here, right click on the strike that I'm looking at, and I can either copy it or I can right click and click add to day trades here, and then it'll pop up on my day trade watch list. If you do the copy method, you would just click here and press Control+V and it'll paste it in. And if you're on Mac, you would press the Mac key +V to paste it in there. So anyway, once you have your strike price on your watch list, again, you can click on the one that you're looking to buy. And so, like if I was looking to buy this SPY 390 put, I can come over here in Active Trader, and I can see I have people selling, 272 people selling at the 136 level. I have 346 buyers at 128 and 272 buyers at 124 I got more sellers here. I'll normally click, somewhere just above where the most sellers are, like here, for instance. It'll place a limit order at 130, and I'll probably get a fill here. If the stock price starts moving, or sorry, if the contract price starts moving up, I can always grab my limit order and just drag it to wherever I want. If I move from 130, while I'm dragging it, it's not going to fill. But if I let go here, I'll get a fill at 138. So that's how I grab my contracts. And also, just really quick, an active trader, you'll want to make yours look like mine probably. Normally, I think default auto send is down here and quantity with buttons is down here. So you want to move both of those up under the first line and click OK. I turn on auto send, so as soon as I click, it'll send my order. And then the quantity with buttons, you can adjust how many contracts you're buying up here or selling. And so the same thing, if I wanted to sell, I can click wherever I want. So even, if I bought this contract here at 130, and in my head I want to sell it for 160, I can come up here and put a limit order at 160 and just wait and hope that it gets filled. I can also just drag it down to a lower strike price. And one of the things that Shorty does is you'll see if you go below where there's buyers, you'll see like a stop versus a limit order. So I can put a stop limit here. And if it falls down to this price, it'll sell at 120. So Shorty, he'll, once he's up whatever percent that he's happy with, he'll put like a stop order, and then he'll start moving that order up as the price keeps increasing. Basically, he does like his own trailing stop loss by moving up his order. Me personally, I like to use the click on the bid and click on limit order, and I'll go down to trailing stop loss and then put in whatever dollar amount I'm willing to risk to see more downside. So like $20 or whatever, click confirm and send, and now I have like a $20 trailing stop loss. Got another question here in Discord. Also want to check. Okay. Discord, sounds good. I know sometimes one flag breaks, the price is moving quickly, so sometimes it's hard to get filled. Okay, yeah. I mean, that's going to happen. Like, sometimes I don't get fills. Sometimes I do. Yeah. So, I mean, I think that's going to be it for the video. Yeah, I mean, I don't know what else to say. I'm just going to call you Kat. Sorry, I don't know how to pronounce your name. You're not always going to get a fill. And you just go with it. I think the biggest thing is to not chase. When I don't get a fill, I just brush it off and move on to the next trade. It is what it is. So just never chase price action. And that's about the best I could tell you. All right, everybody. Well, have a good rest of your weekend. I'm going to hop off now. Anyway, take care. Thanks for joining the video. Good luck to everybody on Monday, and have a good